Good afternoon, welcome to GrainTV. It's Tuesday, December 11th, an active day of trading with soybeans leading the charge higher on a 38-cent advance. Corn up 4, wheat in Kansas City up 5, and Chicago wheat up 8. Cody, what's going on with soybeans?
Well, soybean, when you look at this story, it's very difficult. There's no piece of news that came out that just drove this market higher. It looks as though it continues to be short-term demand. Take a look at soy meal. Soy meal was leading the charge higher here today, trading up 5.17% on the day. Soybeans on the January contract was only up over 3. So when you look at this, soy meal really adding a lot of strength here to the soy complex. But I think one of the things that I want to make clear here is that we're up over $4, but if we continue to see some follow-through buying here tomorrow, you could get up right near those October 30th highs of 408. That could provide some resistance, but if we break through that, be careful because you're breaking right into another resistance level that was set back on May 23rd, right at the 411.5 mark. So that's one thing that I'd be a little bit concerned about. Pay close attention to the trade reaction here because if we do get some follow-through buying, I would suspect that we would see a little bit impulse here to the high side if we break through those resistance levels.
And we did have the CME announce today they were increasing margin on soy meal trading, so that might have some repercussions as well as we trade tomorrow.
Absolutely.
So on the demand side, let's take a look at soybean plants, because obviously they are trying to scramble for available supplies. It is harvest time, but I don't think they're seeing the supplies they need, and as a result, they're seeing those basis levels start to increase. This is the daily change in spot soybeans at some of the key plants around the country. You can see a nickel to a dime higher just in one day. And even today we had some follow through with Decatur going another nickel higher. So certainly the soybean plants are trying to get those beans out of farmers' hands. On the river terminals, we're not seeing quite the strength because barge rates have been ticking up here in the last few days. So certainly cash soybeans are in demand at this time, but are we going to keep that level? Exactly.
And you asked me yesterday, so what do you think? And one of the things I said was that I don't think this is sustainable. The WASDE report came out. That was relatively bearish compared to market expectations. The price action that we saw yesterday, bearish. When you look at the chart, when you look at just the way we closed near lows, that was bearish. And I said, I think it's time to price beans. And today, 38 cents higher, 35 cents higher, right in my face. But the truth is, can you continue to go higher? Now, this story here seems to be on the backbone of short-term demand. Mm-hmm. And what we're seeing, as you mentioned here, is that the cash prices, the basis, is reflecting that. I would say to this, when we're looking at this story, can we sustain this? When you look at stocks to use in the past, right now we're sitting at 12%. When you look at stocks to use in the past, when we've been at 12% or higher, we do not see these prices on it.
Right.
The story that you're mentioning here that is supporting soybeans in the near term is a short-term story. Mm-hmm. I'm looking at this thing as in ending stocks of 1450. And so when I look at this, you gotta accept the fact that it has gone higher, and you need to look at maybe where some of these other opportunities to price soybeans are if you didn't already pull the trigger. I went back to the chart, the daily chart here, used the tools that are available to grain hedge customers. I drew a Fibonacci retracement to look at some key levels here. Looked at some of the previous highs, and one thing you'll notice is that $11, it's a big whole number. It's a 50% retracement level from the highs that we saw before we started breaking lower here back in May. And I think that it might be possible if this thing continues to rally higher. You might want to hang a limit order up there right around that $11 mark, and you might get filled. But I think that's the next resistance level if we get some follow-through buying. Right. I'm still bearish soybeans in the longer term here. Of course, in the short term, you can see some funny things.
Right, and on the supply and demand situation, since those October lows, we've seen no changes that would lead us to believe that USDA's numbers are going to be significantly different than what they are now. We've seen no bigger exports than what they've already projected. They're projecting 4% growth in U.S. exports. we're expecting crush to be slightly higher. So none of those numbers are fundamentally different than what we believed 6 weeks ago when we bottomed this market. So I think as a farmer you have to start saying, let's reward this market. And the carry out to January in the cash market is pretty promising. Once we get past January, the carry flattens a lot. So I think farmers really ought to be looking at cash contracting as well, and maybe owning calls, to capture any sort of upside if it does materialize into the winter.
Absolutely. And you talked about demand here. I mean, can we sustain demand if we continue to climb higher here? Right now, we're already about $40 a ton here, more expensive than South American stock. So,
right.
I would say that, of course, South American isn't right in the prime of their export season, but that does influence price. Other than that, guys, if you have any questions about what we talked about today, give us a call. The number is 877-472-4607. The tools that we showed you today here are available to all Grain Hedge customers, and they're available to you as well. If you take a 14-day trial, you can do so at grainhedge.com. Just click on 14-day trial, put in your information, and we'll help you, walk you through, spend some one-on-one time, make sure you feel comfortable and know how to execute your hedging strategy. Thanks a lot for tuning in. We'll see you here on Wednesday.